Welcome to Equity and Ag, your market update. Corn futures were lower on Wednesday, with May corn dropping 3.5 cents to $4.54 and a quarter, while July slipped 3.25 cents to $4.65. The market had a tough time finding momentum, likely reacting to the larger-than-expected planting intentions released by the USDA earlier this week, along with heavy old crop supplies. We also saw pressure from weaker energy markets midweek. That said, May corn did recover off its lows by the close, bouncing from support around the 100-day moving average near $4.48.5. That keeps the 440 to 450 range as a key support zone. On the upside, bulls will be watching for a move back above the 20-day moving average around 460. Soybeans also finished lower, but showed some resilience. May beans were down 2.5 cents to $11.68.5, while July dropped 1.5 cents to $11.84.5. The market actually staged a solid rebound after early weakness, with May climbing more than 15 cents off the session lows. Traders seem split right now, weighing mixed headlines surrounding the Middle East situation, along with supportive acreage data from the USDA. Technically, May beans held support in the low 1160s and avoided breaking down further. A push above 1178.5 would shift the chart outlook more positive. Wheat took the biggest hit on the day. May Kansas City wheat dropped 21.75 cents to close at $6.1375, with Chicago and Minneapolis contracts also sharply lower. The sell-off was driven by a mix of geopolitical uncertainty, technical selling, and weather pressure, all while supplies remained comfortable both in the U.S. and globally. Notably, this was the first close for May KC wheat below its 20-day moving average since early February. Prices have struggled to stay above 630, and that level continues to act as a tough ceiling for the market. In the cattle market, today's slaughter came in at 107,000 head. That's 4,000 higher than last week, but still 16,000 below this time last year. Live cattle futures finished higher, with gains ranging from 7 to 107, while feeder cattle were sharply higher, up 152 to 275. Beef cutouts are expected to finish lower, with light to moderate movement in the boxed beef market. Disclaimer: this content is for informational and educational purposes only and should not be considered financial or trading advice. Trading futures, options, and other financial instruments involves significant risk and is not suitable for all investors. Always do your own research and consult with a licensed financial advisor before making any trading decisions.